King headlines in the Wall Street Journal today. US stocks post the worst quarter, the worst 3 months since 2022 on the threat of a trade war. I don't think it's a threat, it's here. It's interesting, this particular article here, how to prepare your portfolio for the next market mess. The best way to do that is through trading. In trading, you can make money in any market condition, going long at spot, as I showed in yesterday's video. And the Trump family advances in its all-out crypto bliss, this time with Bitcoin mining. We can see in yesterday's session, the Dow Jones slightly up, the S&P 500 slightly up, the Nasdaq and the Russell 2000 slightly down. If you're in the crypto market, how the main markets move is wildly important. You can see here these are the S&P 500 futures, the Nasdaq futures, the Russell futures, the Dow futures, and a whole lot of other major indexes. When we see the S&P 500 futures, looking at that blue line, which is of course Bitcoin, what are we seeing? Fairly strict adherence to directional movements, not only across the S&P 500, but also the Nasdaq. What about the Russell 2000? Yeah, that looks pretty close. The Dow Jones Industrial Average, yeah, that looks pretty close too. So therefore, what the major markets are doing is wildly important to the crypto market. And flipping back the other way, the main markets don't trade 24/7. They are quite lazy in their trading. Bitcoin's trading all the time, but look at this adherence. What it actually means is you can map back Bitcoin price movements to the major market indices to gain an edge. And who doesn't like an edge? Tariffs are definitely weighing on global financial markets. The key to understand, is this bounce back a forward projection of things that are to come, or is it just a bounce and we will continue down? In this video, we'll look into this very precise answer. Is it going up or is it coming down? Let's run the numbers. I'd like to do a big call out to everybody who commented on yesterday's video. We have such an incredible global family. I'm just so appreciative to join you each day. And when we look at the S&P 500, what are we seeing here? That's not actually a good sign. We're seeing a cut under. Now, we saw some really interesting price action. Everything started really quite red, but it bounced up and ended in the green. Has it broken a downward trend? Not even close. Does this mean we should all go running, screaming for the hills? Not our global family. We believe in buying on red and selling on green. And remember, you don't have to make big percentages to make big percentages. You can do well in any market. Unfortunately, investors can only do well when the price keeps on making higher highs. That's a bit of a problem because the markets are always moving in a wave. In consolidation, the CTKS method is absolutely sterling. And if you look to the back of yesterday's video, I just cover a trade I did on Pepe on Sunday. And that's the beautiful thing with crypto. You can trade it 24/7. It never sleeps, but you should. One of the best things that you can do as an investor or a trader, and we know that all investors become traders anytime they buy or sell. So buying effectively is something that every single investor should focus on. Let's just have a quick look through the market and then we'll come back to one of the secrets to buying effectively is to know where price can head. If you know where price can stop out, for example, upward structural resistance in the S&P 500, we've reached 2 levels. We could definitely pull back from here. If we pull back, the 55-57 level is a very good level of structural support. If we manage to get above the 56.13, we're heading up to the 56.72 level. But you really need to know the lay of the land, so let's have a quick blitz through the markets. Inside the main markets, we saw Tesla come down 1.67%, Amazon down, Nvidia down, Microsoft down, but the banks did rather well. Also, consumer defensive, healthcare, real estate, energy, and utilities did well. In fact, all sectors were up 0.55%. The best performing sector, consumer staples. The worst, consumer discretionary. The stock market is in extreme fear territory. There are some big economic data releases happening in just a couple of days. Just prepare for incoming volatility whenever JOLTS job openings and the ADP non-farm employment change come out. And then if you don't get enough on Wednesday, you can just wait for Friday and do it all again. In around 36 days, the FOMC will meet again, and there's currently an 85.5% probability of no rate cut. Inside the crypto market, Bitcoin is slightly up, Ethereum is slightly up, Solana is slightly up, everything slightly up or slightly down. The Crypto Fear and Greed Index has taken a bit of a dive recently. More fear is entering the crypto market. Looking at the Bitcoin spot ETF net inflows, we've actually had an outflow in the past 24 hours, and it's the first we've seen for quite a period of time. In fact, you can see it here on this chart. We've had quite a substantial amount of days of inflows, but they're decreasing in relative strength. We're getting outflows at the current time. Something pretty interesting is happening with total Ethereum spot ETF net inflows. We've had our first positive day after so many negative days. In fact, you can see it here. Ethereum has been bleeding in terms of inflows, net inflows. They've been negative, but we're starting to see a bit of a sign of life. In terms of total liquidations, we're down $318 million, and the vast majority were long liquidations, over $200 million. And this poor guy is feeling a lot lighter in his wallet, $13.31 million lighter. Looking at the liquidation heat map, some things that levels that you might like to keep your eye on, 84,161 to the upside, and 81,422. Going to the 24-hour basis, we can see around the 81 and 84 levels have quite a number of, especially on the 84 level on the 48-hour. So these are a couple of levels that you want to keep in mind for today's price action, 81 to 84. I put out a literal masterclass video to the public on interpreting price and action, intercorrelation and interconnection. And we saw in yesterday's price action on the VIX, and if you look at yesterday's video, you're going to understand what I'm talking about really, really well. The VIX spiked up and then it came down. Is this still in an uptrend? You bet it is. What we must do as professional investors and traders is to stack probabilities. When we stack this particular probability, the increase in VIX, even though it's a pretty dirty candle, what do I mean by dirty candle? Instead of being just fully green, it flipped up, which showed that there was so much fear inside the market and then it retraced. And with tariffs hitting right, left and center, we could expect that the VIX could increase again, so please be aware of this. When looking at the counterpart to the VIX, which is junk bonds, we can see that the particular price started all the way down here. Now, what does that mean? And if you looked at yesterday's video, you'll know and understand how incredibly important junk bonds is to stacking probabilities inside the stock market, commodities, and crypto. Now, what did it mean? As the VIX spiked up, junk bonds spiked down. And as the VIX came down, junk bonds came up. This was responsible for a relief rally inside yesterday's price action. This is why doing your cheat sheet each and every day is really, really important, because it keeps a finger on the pulse of financial markets. This could have turned into a buy arc. Instead, it failed right here. So please be aware when we're stacking probabilities, this actually means with the VIX in an uptrend, it could come down, but then keep on going. With junk bonds in a downtrend, it could keep coming up a little bit, but the likelihood is that it keeps on retracing. Now, with this information and news, should you be concerned? Not at all, because we take advantage of these downward price movements. I show you exactly how to do that in the profiting course. Therefore, looking on the daily basis on the S&P 500, we can see that there was a screaming amount of panic, and then there was relief. but we're still under negative price momentum. On a daily basis, what happened with the Nasdaq? The Nasdaq had, you could say, a bit of a retracement. Now that is not much of a retracement. 50% retracement is what we'd anticipate. There's a lot of fear inside the market. And then we broke down here, screaming amounts of fear, and oh, it's not too bad, but we're still under negative price momentum. This is not a cause for concern. This is a cause to celebrate, because this is how you get on the right side of the percentage, but you must learn how to trade. I've been saying for many months that 2025 will be the year of the trader. Now, why did I say that? Because there's so much negative volatility inside markets that you must be prepared to ride these waves to the upside and also to ride them to the downside. When we look at the Dow Jones on a daily basis, what can we see? Screaming amounts of fear as the VIX pumped up, then followed by an intraday relief rally as the VIX came down and junk bonds came up. If you're doing the cheat sheet, you understand precisely what I'm talking about. Looking at the Russell 2000, which is a really good indicator because it feels the risk a lot like Bitcoin does. And we can see that there was that big spike down in fear and then a relief rally, but it's not too much from where it started. Now the current candle is basically telling us that it's not buying this bounce at the current time. We are still under negative price momentum. You can see that we've got a long way to go until we turn the corner in terms of the Russell 2000. One of the things that you want to be aware of is to understand how price is strengthening and weakening. Please refer to the masterclass video. That is what I put out in the public channel, yesterday's video. That is literally this video, the masterclass institutional secrets video. It's a bit of a long one, but it's literally like a masterclass video. And thank you to everybody that commented on yesterday's video. Just an awesome global family. Geopolitical turmoil is best measured through gold, and gold has been on a rampage. But of course gold always obeys structure, so let's just see where the structural levels are at the current time. We can see in yesterday's session we got above that 30.87. We also got above the 31.05. When you find that you pile through very heavy structural overhead resistance, it will generally wobble, come back and retrace and retest the upper and lower boundaries several times. If we break above 31.27, we're going to 31.64. If we fail to hold this, we're coming back to 31.05 and 30.87. These are really quite good levels if we're consolidating. Please let me know in the comments, what do you anticipate gold doing in the next 24 hours? Going up to 31.64 or coming back to 31.05 or 30.87? Now the secondary question to that question, if we do come up in terms of gold's price, what are the major market indices doing? Creating all the linkages through intercorrelation and interconnection is the key to success inside financial markets. One thing we know, the total crypto market cap and the stock market are intimately connected. When we saw the VIX spiking up, what did that do to total crypto market cap? It pulled it down. Of course, it pulled down every single alt, and it pulled down Bitcoin as well. And what did we see happening then? That relief rally. This is why we must pay attention to the major market indices, because crypto feels it. It actually feels it in advance. Many people think that the crypto market moves in absolute independence from the stock market, commodities market, forex market, and every other market. It couldn't be further from the truth. All markets are intercorrelated and interdependent. Most importantly, all markets are structurally driven. If we know where the structure is, we can tell what is occurring inside the market as well. For example, as we sold off, we found that total crypto market cap around that 2.61 trillion was very strong. That acted as a gravitational well to pull things back to. we're seeing right now that the VIX is increasing. Even if it's not trading, I know exactly what the VIX is doing because the VIX inversely impacts the major index futures. That's the way you want to look through these charts, and looking through the charts is a very important thing to do. And what we can see right now, as total crypto market cap failed on this 2.65, it's coming down to this cluster of structural support levels where it will be caught by price. Looking towards Bitcoin, we saw that Bitcoin sold off because the VIX spiked, junk bonds fell, and then we had those internal relief rallies, which looked exactly like this. We're also seeing that Bitcoin is starting to come down, which means the VIX is actually spiking in the background. As we know, the most important thing to look at is actually the structure. And when we look at structure, this 81,866 level is a really good level for Bitcoin. Even though Bitcoin sold down, it was caught by these safety nets, and those safety nets will catch Bitcoin again. The only question is if we see an underside retest of the 81,580 mark, that's not such a good thing. If we see that we come down, test, and go up again, and we start to get past the $83,000 level, that's actually incredibly good. But which way are the major market indices and crypto likely to go because of stacked probabilities? Rule number 4, price moves in waves. That means even if price goes up, it's making a series of higher highs and higher lows all the way up. It's not just moving like that, it's moving in a wave. What about if price comes down? It's making a series of lower lows, lower highs, lower lows, lower highs, all the way down. So when we talk about direction, we're talking about overarching direction based on stack probabilities. This raises the question, how do we stack probabilities? We know the VIX is in an uptrend, junk is in a downtrend. S&P 500, the Nasdaq, the Dow, the Russell, they're all in downtrends. We know that Bitcoin and total are also in downtrends. We also know that gold is in an uptrend, as is silver, and also copper. For those doing the cheat sheet, you would have noticed the US 10-year yield just dropped like a brick, and the US 2-year did exactly the same. Oil actually went up in the past 24 hours. People are getting incredibly scared about the global effect of tariffs and reciprocal trade wars. So one thing to just bear in mind, because we're looking at the charts until we see signs of repair inside row 3, which will initially show as signs of repair inside row 5, we have to assume that the trend is continuing down. That doesn't mean that the trend will just go down in a straight line. Remember, up and down, but overall down. This doesn't mean panic, it means getting yourself ready to profit from volatility. To understand if Bitcoin and total crypto market are turning around, please keep your eyes on the subcomponents inside row 6 and row 7. If these components are all decaying, if they're coming down and down and down, that points to Bitcoin and total crypto market cap coming down as well, which will cross-reflect right the way back into row 3 and help you to understand what's happening inside row 1 and row 2. And you can get the cheat sheet completely free. If you just go to CTKSmethod.org and then you just scroll down the page, you'll find this Mastering Price Action. That's where you can download the cheat sheet absolutely free. It's a fantastic resource to actually use. You'll find that when you understand where the cheat sheet components are going, it's a literal game changer. And there are also free videos to help you to understand how to use the cheat sheet, and there's of course the official ticker list, which is a really good resource to keep your eyes on. Please let me know in the comments, where do you think we're headed to inside the next 24 hours? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.